Good morning and welcome to the Breakfast Club. So far we have nobody popped in yet, but we're going to go in and just kind of look at the market as it's unfolding. It opened up about 11 minutes ago. So I'm just going to start here at the British pound. This is the daily chart. And we've just come back, broken down below this order block here. Come back into this order block right here. And it looks slightly heavy today, even though it's pretty long on the upside. We're looking at this fair value gap here on the upside. I like to put this in blue. That's my color for my daily gaps. And as you can see, we've come into the consequent encroachment of that fair value gap on the daily nicely. Hit the midpoint of that. And we've had a nice little pullback off of it, creating this order block, 2-day order block, break down below it. Then we've come back into the order block's body nicely, and we've had a slight pull away. So here is our mitigation block. This is the 1, 2, 3, 4 candles, last up close candles that don't make a run down below an old low. So unless you look at this swing point here, that would be a breaker. No,
Put your thing up. I can't see your chart, please.
Oh, that would help if I put it on the chart, right? Oh, let me get you guys on here. Morning, Steve. You're live, by the way, just so you know. You're live on the internet at the Breakfast Club.
Yeah, I know. I just want to see. I don't see your chart.
There you go.
Okay.
All right, we're just kind of going over the daily British pound. Just talking about what it's come down to. I'm just going to close off my previous trades here. So it's kind of heavy off of this order block here right now. We're looking for a run back down into. This is actually a mitigation block because we haven't actually run below an old low here yet. So we're looking to run back down into this little breaker, which was the last up close candle before a run below an old low right here. And we've come down and we've bounced off of that. So we're kind of between these two points here right now on the British pound. We'll go down into the hourly and see if there's anything we can see on that. Oh, there we go. We have a little bit of consolidation, a little breakdown, pop back up. And we got into this fair value gap here on the hourly. We broke through it. Now we're coming back to it.
I think it's going down, isn't it?
Yeah, I think we're looking for somewhere in here.
Are you in it? You're not in it.
No, I'm not in it, you know. And yeah, we might find some support off of here, or at least back into this. And sorry for the color, okay, guys, but it's kind of, I like my nice yellow color in here. Anything under blue ends up being a bit of a burn your retina out kind of color. I'll go with a golden yellow. How's that? A little more tamer. So we're looking back to get back into here. We want to kind of step up on top of this fair value gap here and start getting some leverage to start heading back up into a higher time frame fair value gaps. Breaker sitting way up here.
That looks like gold mine going up.
Yeah, it does. So that's kind of where I'm looking at right there, either into here, which is the top, running back into this consolidated area here, or getting on top of it right here, finding some support, and then pushing our way up. So that's the pound. So we'll keep an eye on that
What,
area
what,
there.
what is the distance of that? When the pound went down, what's that distance?
From there to there?
Yeah.
The distance was 231 pips, 232 pips. Yeah, it's quite a run. All right, let's look at the euro dollar on the daily. Let me get all this stuff off of here first. So this is the daily. This was the fair value gap we talk about here. I love the way this kind of just panned out here. Let me blue. I'll kind of mark these out here for you so you get an idea of what it is I'm looking at. There. So that was the fair value gap. There's another fair value gap sitting right in here. And what happened is we broke down below this with a body. I like to see a body break down below this fair value gap here and then come back to it. So as you can see, this beautiful execution here is we dropped below with a body, came back up, tagged it, ran back into it one more time into that fair value gap and just into this fair value gap and continued on the downside. Love the way that one panned out, and actually the lines that we'd marked out they were hit perfectly. So that's the daily. Did you get punted there?
Yeah, I did it myself.
Oh, you kicked yourself out.
Yeah.
All right.
Please put me back in.
Okay.
Now, okay, there was news at 2 o'clock in Europe, which was CPI. When does that? Can you show me 2 o'clock on that chart right there?
On 2 o'clock in Europe?
Yeah.
2 o'clock would be like 2 a.m. New York time, right?
Yeah.
2 a.m. New York time is 9. So that's 9 o'clock, probably that high there. Let me look at the daily. Let me go to the hourly. Let me go to the hourly. So here's your 9 o'clock right here.
Okay.
And 10 o'clock right there.
Okay.
So if the 9 o'clock was the release, that's the news release, negative to the downside, takes in those people that are going long.
Okay.
Takes them out and then it goes up for a run back up. I
just wanted to, okay, go ahead.
I like this run above here. So now we've got this consolidation with a false break below, clean out the longs. And then we start to run back up. We get a little breakaway gap here. And we've got above now this fair value gap and this fair value gap. And now we've come back to it and we're just short of tagging it again to go long. So I do like euro in here on the hourly basis. Chartreuse this time.
So you're of the assumption that the dollar's maxed out. Am I gathering your?
Well, yeah. Let's have a look at the dollar, the Dixie. Well, we've come back into that fair value gap on this side here. We've come into a mitigation block here. Last down close candle, unless you call this a little run up above. It didn't break anything above here, so if the true definition is here's a swing point, then that would be a breaker. So it broke last down close candle before a run above an old high, so that ran above an old high.
I think it hit right where you were talking about, the lower part of that fair value gap yesterday.
When we were talking,
right there.
Yeah, exactly. So when we're talking about that fair value gap, that becomes an inversion fair value gap, right? We break below it, come back to it.
Yeah, you give me instruction on what that was yesterday.
So we hit off of that. So I'm kind of looking to see if this inversion gap and this breaker actually holds price. So don't forget
what's your take on the candle count?
Where's our candle count? What are we sitting at today? We're sitting at
Today's a 28.
It's a 20 candle today. So 2021 is usually you usually get a high on around 2021. So this may be the high. 19 may have been the reversal day. 19 reversal. 2021 is also a swing high point. So we may push up into this inversion gap again and back into the breaker. Don't forget that whole range of that breaker is potentially where price can come back into, all the way down to there, right? So that whole bubble right there is the potential for it to come back into. I wouldn't want to see the midpoint of this candle get taken, which is the close of that fair value gap. I wouldn't want to see that get taken out. Otherwise, you're looking at more of a, are we going to get on top of this thing now, this inversion gap, and now start to run back up even higher and fill this stuff in? So I want to see this kind of inversion fair value gap hold price, and you've got the multiple different levels in that we aren't really going to get into discussing right now. But keep your eye on that candle, that inversion gap over the next, or for the rest of today.
What's the top of that? What's the top of that inversion candle? What's the top of that fair value gap right there?
The top of it would be
101.75.
Yeah, 101.75.
Okay.
And that's just on investing.com. I know TradingView has probably has a different one. So just keep an eye on if you're in TradingView or wherever your chart is.
Yeah, I have a quote on TradingView on my app on my phone.
Okay.
So I just go to TradingView and see the level.
Yeah, perfect. I think I've got. Wait a second, I got TradingView over here. Let me just.
It doesn't matter.
I'm gonna drag that one over here.
Oh, here we go. Went down, touch the fair value gap. What are you on right there? That's a euro. It could go back up.
So this is TradingView. So is this the daily? Daily Dixie. There's that inversion fair value gap right there. We have definitely a gap in price in here.
That's not the top on that one though, is it? 101 of the inversion fair value.
The inversion fair value gap is actually 101.75. Yeah, it's the same price.
Okay, cool.
Good. So that's the where we've just stabbed into it already once today. So kind of keep an eye on that.
So this isn't look at that. If this was a reversal for the dollar today on the way down, that's a buy right there.
Yeah.
Look at that fair value gap over there on the left that you could fill. Oh my God, that's gold.
This is a nice one, and I like these. Originally, we came up into this order block here, and halfway through, order block, this wick of this down close candle. Old low, we broke through it. And now we're looking to get into, where's our lowest down close candles here? This order block here, which is the breaker, parent breaker of this big run up above those highs. So we're looking at least getting up into this area here, which is,
do you think it's going to do that?
It's 40 pips away.
Is this next week?
Right now, I'm not quite sure. We'll have to see what happens in the next 5 minutes. And we've got
6:55. Okay, 7 o'clock. Okay.
And we've got this one. This is the prediction I was making yesterday on gold. The prediction was, I was kind of drawing this out for Preston yesterday, saying I'd like to see price come back into that hourly fair value gap.
Yeah.
On the hourly.
God dang, you're right on.
Yeah,
Holy shit, Darren.
It was right there.
You crazy bastard.
So
Darren, you are a crazy son of a bitch.
So I was kind of looking at this on the 5-minute chart, and
it's not going to go up there today, I don't think.
So this is what I was kind of looking.
It might, though, by the end of the day.
Oh yeah, this is only a 5-minute chart, so I was looking for it to come down into that, and the setup was pretty much, if it comes down to here,
I think I was here yesterday when you were doing that.
Oh, okay,
at the
yeah.
very
So
bottom. Yeah.
So we're just looking for
yeah.
this breaker to provide support above that fair value gap. So we got above the fair value gap. We did come back to the breaker exactly. So these are the points. Don't worry about so much about. I extended the lines here just to kind of.
Yeah.
Hasn't reached my point yet. It did not come down, which is fine. The setup is actually to look for how Michael describes the step up onto the rock to continue your mountain climbing, right? So the initial run was to go up into that above the fair value, come back down into the breaker, which is what we called, and then to continue running up into this area up in here.
What's that number right there? 1973?
1973, yeah, somewhere around there.
So far
it's
working
out.
Down. Yeah,
so far it's working out well.
You're a crazy bastard. That's really good work.
Thanks. Yeah, it's good if you can kind of say this is what I want to see price do.
Yeah, that's amazing. Yeah, that's really good work. Really good.
Thanks. So we're looking at
it's got to get over that fair value gap, though.
Yeah, it's got to get some legs on top of here. Right now, you see it's finding some support right at that level. See how the bodies are playing around, trying to respect the top of that fair value gap, which is what I like to see. Let me just move this one down here to the 15-minute fair value gap. So now we've climbed up on top of it here. Now you want to find support. There's the last. I'll make this bigger because I know you're pushed up against your screen here. There's the support. That one's landing right on top of that. We'd like to see the support and push off of here and continue starting to drive up into this fair value gap up here. Equal highs. They're not going to leave that untouched. So let's look at the whole weekly range here. So we got 1, 2, 3, 4, 5. So here's our weekly range. So we're in Friday. So from here to here. So yesterday's high and today's low. Or probably yesterday's low. Yeah, that whole range is right here. We're inside yesterday's candle was the whole weekly range. So if we look at the whole weekly range, let me make this bigger. So if that's our weekly range, from there to here, 2, 3, 4, 5. So actually it was today's low that started off, that pushed us all the way down to here.
Oh, so
no, we didn't.
Low.
No, did we get down there? No, we didn't get down there.
Wasn't it?
That's my line I drew in there.
Yeah.
I'm going to close that out of there now just so people got the idea of what it was I was looking for, which is slowly panning out. Get all those lines out of there. All right. So if that's the range, 25% of the range, we've already pulled back into 25% of the range. So are we going to come back into this? There's that last little portion right there of that fill for the fair value gap. There's a little tiny, it's not really a fair value gap because we're still in this candle. But to fill the back to this order block.
It looks to me like that's something that maybe Monday could do. I don't know. Maybe today. I think it's going to fill that.
Yeah, I do like We'll find out if
That
this is
kind
a
of depends on
midpoint.
what you say about the dollar. That wasn't.
Let's look at this right here, right now, first. Right there. So I like the midpoint of that wick as a return to the high of the day, or at least until into this range, because we could be just order blocks, like a 2-day order block. You run down, come
Yeah,
back into it like a regular block,
yeah,
and then start coming back
and
into
then go
this
right back down.
lower time
Yeah,
frame fair value gap here. So this could be
yeah,
just a simple run back down, or we could have just swept a little, again, these old lows, and we could be pushing up through, but right now it looks more heavy than it does bullish.
yeah.
So
Well, that's because you're a dollar. The Dixie looks
yeah,
bullish. Yeah,
so I'm looking
at
for
least that's my opinion.
up here right now. That's the kind of area I'm looking at for this price to come back into, and then we'll look at the rest of this. What was that? That was a 4-hour perhaps. Nope. There's your 4-hour fair value gap. We're trying to get on top of that. And there's a big chunk of
Play dirt right there.
pay dirt up here. We have a definite breaker right here. At least the last 2 down close candles before it runs above old highs. Parent breaker. So we're sitting inside this big monster right here right now on a 4-hour. So that's an 8-hour breaker sitting right there. So we want to see this get on top of this today. The next 4 hours there. Let's look at the hourly. Hourly fair value gap from here to here. Again, we want to see it get on top of it. Start pushing up into this next range here. We have consolidation. Break in structure here. We run back into order block right there. Nice. Then we have another cluster of candles, order blocks, come back up, break structure, come back into order block, found some support, nice little wick away. Now we're looking to keep pushing up. So we're looking for price to either continue to run up here, or are we just going to roll over and come back down again? Because we have no bodies. Remember I mentioned before about these wicks? We do see wicks popping up here, and I want to see a body break out above that, come back and find support.
Yeah. It seems like they hit the top of that fair value gap. It just comes right back up. So that's pretty. Right now. That's just a pretty good little resistance area there.
Right. So I just want to see this kind of. We've got this fair value gap's been tagged already with a wick. But again, I like to see bodies, because this could be one of those just pop up, roll over, come back down into another consolidation inside this fair value gap. It doesn't look real
strong, does it, on the way up?
So we'll kind of keep an eye on that one from a gold perspective. What do we have for the 15-minute? We're coming into our silver bullet setup here. So we get a nice silver bullet run into that higher time frame of fair value gap is what we're looking for if we decide to see price.
Are you talking a silver bullet on gold?
Yeah, like if it decides to run up into this area in here, we've got on top of this right here on the 15-minute, right? So let's get down into a 5-minute. Whew, that's bright. Are your retinas cooking?
Yeah, I backed off right away. I put my laptop at the other end of the room.
You put your sunglasses on when I put on a sunny chart of gold. Well, this one got gold is shiny, my friend. So
I put the mirror on it, and I'm blinding my wife.
Yeah, this is. Yeah, I don't see a whole hell of a lot in here. This is just a whole bunch of noise right now.
Yeah, it looks like garbage to me.
You don't want to play in that.
No, that's not a play.
In that. So let's look for.
Go to the S&P and see.
S&P 500. What's going on here?
Yeah, look at it.
It's been a nice little run today.
Yeah. Look at it for a silver bullet. That's what Michael does.
Yeah, there's not a heck of a lot left in this thing, but for us, that's we want 5 handles out of that. That's plenty of handles all the way up to fill the rest of this gap inside this order block right here. There's our breaker, little happy breaker sitting up in there. This was a beautiful entry. When you talk about a breaker inside the fair value gap, there's your breaker. You break down below structure, fair value gap. You come back in, load that boat on that sucker right there, and look at that beautiful rundown. Like, oh, textbook 2022 Michael mentorship right there. Lovely, lovely. That would have been.
Was that the unicorn?
Oh, that would have been, no, not the unicorn, but it was certainly a beautiful 2022 mentorship entry. That's a textbook. Load up the boat and go short and make a ton. That was like how many did that hit for the day? If you look all the way down to here, that's 71 handles.
Oh my God.
That's a monster day.
That's retirement.
Yeah, and that is the perfect setup, man. If I would have seen that yesterday, I would have been all over that. So that is a beautiful little entry. Anyway, let's get back to what coulda, shoulda, woulda.
You know what? I have a bag full of those every day.
Exactly.
I'm like Santa
bag
Claus.
of coulda,
Santa
shoulda,
Claus
woulda.
bag in the back. I carry it around with me. It's shoulda, woulda, couldas.
Yeah. That's like when we ride motorcycles. They always say, you start off riding motorcycles, you get a bag full of luck and a bag full of skill. And he says, when you first start off, you get the bag of luck is full and your bag of skills is empty. And you better hope the bag of skills fills up before your luck runs out.
Yeah. Yeah.
So that's what we're looking. We're looking for filling up our skill set here.
That's not going to be easy.
Yeah, so we're already in the premium. If you're looking at this range here.
Oh yeah. We're in a premium.
Like we're already way back into the premium of that. We're past the 50%
you don't want
mark.
to go very long. Yeah.
But we have, as you can see, we have got a body above this fair value gap here now. So now we've got some clear intentions to keep driving up. We've got through all this chaff down here, and we're digging into the 62% retracement. Is the body going to respect that? Is it going to hold right there, roll over, and start coming back down again? I don't know.
I don't know.
It still looks like it's got more upside for me. So I've got nothing for.
Yeah, but we're just looking for a silver bullet. That's all.
We're just looking for a silver bullet entry here. So
it's 1712 actually. So let me look here.
So
we don't have any.
If that was the rollover, because we hit that fair value gap we talked about there. If that body continues to respect that and we start to degrade now, even though this is super heavy or super light, it's a lot of lift in it.
Yeah.
We'll see what happens here in a few minutes.
Yeah, you don't want to go negative. You don't want to go too much against the trend either.
Exactly.
And the trend today is up, unless there's something to change that. But I looked at 17. Let's see, 7. I don't see a silver bullet on anything.
No, this GBP. Look at that fair value gap sitting right there. We came back into it, dug into the consequent encroachment of it, and now we're looking to push up, which means
GDP. That looks like the play to be in right there.
Well, this is the one right here. See how it came all the way down in the last hour? Right back to our range.
Yeah, how come we're not playing those?
We should be, but we're coming into this. Are we going to get some resistance here? We're into the midpoint of this. I like the fill. I like the feel of that. We're still inside the breaker, and we can still get a fill on that. This is where you come down, you break below, come back up, find support at the breaker, and then roll over and leave this open. That just becomes a big breakaway gap or measuring gap. And continue on the downside, right? Because this is pretty heavy overall. So this could be just a false run up. Clear out all the guys that are trailing their stops.
The only portion of your comments over the last 15 minutes that kind of contradict is you're looking for, I think, and I might be wrong, but you say the euro's heavy, which means the dollar's higher. But then you had the gold going up, which would be the dollar lower. Now there you go. There's gold. Look at it. It broke out.
There's gold going up. Okay, so this is good.
Which is dollar going down, yeah. Now, that's a good breakout right there if it works.
So let's look at 1 minute.
You might have a trade right there, Darren.
We might have something coming up here. Now I'd like to see that sucker come back.
Yeah, I think you might have a trade right there.
Yeah, it looks pretty sloppy. Got no.
Yeah.
That's the 12.
Okay, we're at 1712. Do you see anything? It's gone, Darren. It's gone.
Mm-hmm. Yeah, it's still early in that. Yeah, it's slowly going to grind its way up to that original prediction for the hourly. I think we're going to start to grind above here now, so I like to see this come back into that, find some support on the hourly. So I'd like to see that come right back to that yellow box one more time inside that. So whether we push up hard and then come back down, find support here, or push up, create a gap in there and sit on top of here and start running up some more. Let's get 15 minutes here. Yeah, I want to see this come back and look at all these equal highs sitting up here.
Yeah.
Well, I like to see this though. I like to see a breakout like that. I don't get too worried about.
And then you've got a strong candle right there.
Yeah, that's
so
right.
You've got a good potential breakout right there.
Yeah.
The only thing that would change that's that wick over there on the left.
Well, we've got this fair value gap sitting here right now, so the midpoint is right above us. That's good.
Yeah, it looks like it's climbing. Yeah.
So I'd like to see this just roll over now, come back down. We'll create a little gap in here, then come over and come back down. Because then we got our next step, and our next step to the higher.
Yeah, you've got a. Let's see. On the 5 minute, on gold, you've got a higher fractal at 1530. That's that fractal you got right there. Yeah, 1530. I see where you're at. Yeah. Okay.
I like this little pocket right here.
There's a little fair value gap with.
Yeah, there's a little pocket right there.
On the 5 minute. Yeah.
There's your silver bullet right there.
Right. Yeah. Bingo. Yeah. That's exactly what I was getting at. I didn't know silver bullets work on a 5 minute.
Yeah, yeah. He says start off 5, 4, 3, 2, 1, work your way, and then get down into the seconds. See if you can find something. So
Oh,
I like that.
you start at 5.
Yeah, well, you can start it. He likes they can usually form in the 30-second to 1 minute, right? But we don't trade on the 30-second chart.
Yeah. Okay, so yeah, it's coming down just a little bit on the 5 minute. So
yeah, I want to see that
do you
rollover
think
come in here?
okay, would you take it all the way down? Would you not enter until it gets to the base of the fair value gap? Is that what you're going to do?
You can
Where's
take
your
it.
entry?
You can take an entry anywhere inside there. I'd like to see it come back into
Right there.
into the highs here, but the fair value gap is the
Okay. Yeah.
is the entry.
Fair value gap's kind of the foundation, right?
Yeah.
In a roundabout way.
And then you got to be prepared to put your stop loss below the next recent low, which is down here. So if we get something that comes into there,
yeah, it's coming down now.
we'll take that.
Let's see if there was anything on the S&P real quick. It came down to that fair value gap. That was on the 1 minute.
Here we go.
Yeah, it's about to touch it. It did touch it. Did you enter?
No, it hasn't touched it yet for me. I want to see it come into there. Not just, if I miss it, I miss it. I don't care. I want to see it come.
I did. I joined.
You took it?
Yeah,
Excellent.
Yeah, because I think it's going to go. It came down. I didn't get the right at the fair value gap because it's coming right down now.
Yeah, because you would have probably, if you would have got here, then you would have got your spread. You would have probably got up there somewhere.
Yeah, I'm upside down right now. I'll put my stops into those.
Underneath that recent low here.
Yeah.
This is when we turn the bot on and it starts to make its little dig.
Okay. I got it on.
Okay.
Engine only.
Did it take the, just the engine only? Okay. That's the pop in there. That's all we really needed.
It's in a hurry to do nothing. Yeah, the S&P's weakening up a little too. It looks like the peak on the S&P was at 1717. Do you have there's a 1717 number, 17 number, the 17 candle on the 1 minute? Is that a term for you? I thought you were looking at you looked at the 1712. I thought the 1717 rang the bell.
Yeah.
Am I correct?
Yeah. Oh, that's what I wanted right there. Shit. Okay. Well, I'm right in on the edge of it anyway, so. Do the stop loss, stick it down in there.
Well, I'm taking a bloodbath on gold.
That's good. There's your entry right there.
Did you just get in, or are you not?
Oh
in?
yeah, I'm up there.
Okay.
So we've got all the way down to this, retouching this fair value gap one more time.
Yeah, it's going through it now.
Mine's just coming to it. So there's your equal lows. Cat's tagging it now.
Oh, man.
We're digging into this breaker now. What that look like on the 1 minute? That's the 1 minute breaker right there. Right above it, come back into it. So
Looks like we're going again, huh?
mm-hmm.
We're still good.
Yeah, don't sweat it. Yeah, we'll kind of just watch, see how it goes. Just find, see if we can find support here on the 1 minute. Now we've got, I like to see this push through. Thank you. And now we want to see it start to lift. Now we've got this playing off this breaker here is what I like. And now I want to see it kind of run up. Okay. So on the 1 minute, you'd be looking and saying, okay, now does this just come back to %50 of that range, right? Now we're looking for, we got into a little discount of this little range. Now we're starting to push back up, running for these old highs up here now. Get through this guy here. I want to see these two stay open here. Maybe come back to right here. Okay, we're going to come into this guy's low here. We're still inside this guy, and we still got this guy open. So this could be one of those little island reversal type things on the 1 minute. So we're just still inside that guy there. I like that one because it's the higher one.
Island reversal going back up, you mean, or
going
down?
Yeah, we'll start to push that back up now, right? We have a fair value gap. See if the body respects that. And keep pushing up for higher.
It's having a hard time right there. But it might climb it. It might climb it. I gotta go to the bathroom. I'll be back. I'll put you on call. I gotta pee or I'm gonna blow up.
Our breakfast club. Everybody has a coffee. Go for a pee. When you get over 50, that's a regular occurrence at the breakfast club. I'd like to see this stay open. They're still respecting this gap here. Got some wicks. It's starting to get sloppy in here now. You want to see some action. You want to see this starting to leave the range. Start to push up higher into that higher objective we've been looking at. But this is super sloppy. Like you want to see some energy in these candles now. We want to see them just accelerate to the upside. Let's look at this here. So we came back into the fair value gap on the hourly. That was the hourly, right? Broke
Okay,
out.
I want you to notice something
What's that?
on that particular chart. What do you got? Okay, you got gold. Okay, yesterday we had an announcement at 15:30 that I think it was durable goods or something like that. And gold shot down, okay? All of the other major currencies, if you look at the pound, it shot down like that.
Right.
So what I'm thinking about is I told you that hedge trade, right? If that particular hedge trade that I brought your attention and doing on the robot would have absolutely killed it on these type of drops, okay? Now, it would not work on the, and I did try it on the Fed day, but the Fed day on the it comes at 11 o'clock during the morning, and it goes up and down and up. So that eats that trade out. That trade won't work when they do the Fed announcement, but it does work when you go to a currency. For some reason, they're not manipulated as much as the S&P, or I think it will work. And so you've got a big down, and I've done a couple of those on the Australian dollar, and it's absolutely a potential. So what I'm going to do this next month is I'm going to starting on Monday, I'm going to start documenting and doing a spreadsheet for a month on these, trying to find these particular trades on announcements that when these charts drop like that. And then I'll share that information with you guys.
Okay.
Okay?
Yep, sounds good. Thanks.
And I'll do that. I'll do each one of those every day if they're there or not. There'll be another one on Monday, but there was not one today. But that's a major drop right there. And one trade that I saw that I was going to bring to your attention is when it goes down like that at the top and gold goes down, all the way down. Yeah, it'll go all the way down. And sometimes it did on the Australian dollar. At the very bottom, it created a fractal. So what I thought was when you go down and you have an extreme down like that,
Right.
Then what you do is buy the fractal for the upside, right? Because you would have got this move up, so you got a big move down. Then there's a fractal created, either a daily or hourly or 4 hour or what, and then just buy that fractal for the way back up and hold it for a day or two. What do you think of that idea, Darren? When I said I was thinking of another trade of buying an extreme, it would be that extreme when it comes down like that, where you have those two big candles drop down big time. That's a big rubber band. the way I look at it in retail, and that rubber band gets stretched. And then when that fractal occurs, or if there is a fractal there, you buy that, and then that rubber band releases up and goes up. See, gold goes up a little bit. If you look at everything, even the pound, look at the pound. When it went down hard, it still comes up a little bit. So you could buy that fractal after that big move down on the 1530 candle, and or 1540, whatever. And so anyway, there's a thought process. Okay.
Okay. So if you're going to buy the fractal, I'm assuming that you're going to take this fractal down here, right?
Right. Yes.
So if you're going to take the fractal, it becomes a fractal when you have one lower candle and a higher candle on either side, a higher low on either side. So if you take, so that validates that as a fractal when this candle here opens. So if you do take that fractal, is what you're saying, if you're going to take it, you're going to be buying in here.
Okay.
To go long, according to what you were saying, and then your stop loss would go below the fractal, right?
Right. Yes.
So if in this particular case, if you did that, then that fractal there, so you're from here to there is your stop loss. That's 41 points.
Okay.
Okay, or $41. So from there to there, and if you look over here, you'll see the low of this candle is 1942.68. If this was here and our stop loss is at 1942.68, look at the low now, 1942.65. So this actually dropped 3 pips below your fractal, right?
So that wouldn't have worked.
So that you would have lost a full load there. Whatever you put on, you would have lost everything. Yeah. So it's an interesting theory that you have. I don't know how, you'd have to look at that over a longer period of time. It's nothing that I've ever been taught, but if you've seen something there.
Yeah, I saw it on the Australian dollar. There was a move down like that, 2 candles, huge candles down, and then at the end of the second candle down, it created a fractal. And then from there, it started doing what gold did. It started inching back up. And so I thought, oh my God, there's a big move down a lot of times, and then just buy the bottom of that big move down of that rubber band and let them go back up.
Okay, let's have a look at that.
But it's got to be a big, fast, hard move down. It can't be a gradual move down.
Okay, so this is Australian dollar yesterday.
Yeah, no, it wasn't yesterday. It was several days ago. Okay. But yesterday, that'd be fine. That'd be fine.
Okay, so if this was yesterday's rubber band thing that you're talking about. So if this was the push down, and you buy the fractal, you'd be buying the fractal right here to go long, and you would have been peeled out right here.
Yeah, it wouldn't have worked. No. Okay.
So, I'm not sure, Steve, about your theory. I'm not saying it's wrong. I'm not saying it's bad. I'm just I'm all for let's try it. Let's have a look at it and analyze it and see how that might pay out. If you looked at it from a 4-hour chart, how would that be?
Yeah, that looks better.
There's your fractal swing. Yeah. And if you say, I'm going to buy in here, you would have come down. You would have had a little bit of pressure on, and then off you go. So
it might be, it looks like from your comment, just looking at that, it's better at a higher time frame.
I think the 21 candle, or the 22, the 20, 21, 22 anyway, somewhere inside there, you're going to see the low form of the day. So if you if you used your theory with the swing
with
happening,
the candle counting.
If you do the candle count and you do that, I think you might have a little more success on that as a theory.
Let me work on that. Yeah, let me work on that as a theory. I forgot about the candle counting.
So if you use the candle count theory,
I want to use the candle counting. Right. Yes, I do.
So if you use that theory, look at where the key movers are in terms of time and when the news release is. So if the news release coincides with our candle count,
Yeah.
then you might be able to get something like a 21. Like if that's a late in the day news release and it opens up and runs all the way down to 21 candle, and then you
Let
get
me ask you this, Darren. What would you do if the candle, if a lot of the news releases come at 15:30? What's your candle count look like at the 15? You have a swing at 16 to 17, don't you?
yeah.
So the news releases.
So 15:30, you say?
Yeah.
So
Yeah.
if this was a
Yesterday was at 15:30.
okay, let me pull us to the 15:30. 7, 11, 15. So there's 15. So you must have been somewhere inside that thing was when the news release happened, right?
Yeah.
So then you got a news release all the way down. You come back
Yeah,
up.
there'd been a fractal right there. Yeah, you would have done that fractal right there.
So that's that's your swing low below an old low.
Yeah, the problem is, I see what you're saying. You're not going to have that fractal till that other candle's up, and then you're way up there.
Right.
You're too late. You're way too late to the game.
Okay.
You're way too late.
So
and
what
you've
would
already
that-
hit your objective
Okay,
already,
now-
right?
Yeah, count that candle. What's that candle over there? What's that candle right there?
17.
Yeah, what number is that?
17.
Okay, what do you see as a 17? That's a swing candle, right? Well,
Yeah.
right?
Yeah. Yeah.
16, 17. So you would have buy the bottom of the 17 candle if you can. Well, I don't
you
know.
won't buy the bottom yet because you haven't.
Yeah.
You haven't broken this. If you're looking at, depends on what time frame you're talking on, right? So if you're on the hourly time frame, you don't want to be buying that candle just because it ran the low.
Yeah.
You want to make sure it gets above it first. Then you get support at it, fair value gap, a whole bunch of other things, right?
Okay. Hi, Preston.
Is Preston on with us now?
Yeah.
Hey guys. I
Morning.
didn't want to interrupt you guys. We're into it.
Yeah, you're live
we're
in the
on
Breakfast
Gold,
Club,
okay,
my
cool.
friend.
Yeah. Did you bring any pancakes?
Oh man, I wish I did. I should make pancakes. That sounds fantastic. That is a great idea, Steve.
Yeah, just smear it up against the screen so we can all enjoy it.
We'll lick the butter and the syrup
Yeah,
off.
just slurp in the background so I know you're enjoying it.
Yeah.
So for this, Steve, you'll see that's the 20 candle. There's your swing. But
Yeah.
here's your order block, right? The moment we break below that order block with a nice strong body, fair value gap. Now, anytime we get back into that fair value gap, doesn't have to come all the way back there. It's nice if it does. It kind of gives us keys off an old low. But if it's got legs, if it's got intentions to go somewhere, you'll see this body go down and it just comes back in. It may just tag the edge of that fair value gap or come back into the threshold. And it doesn't. So if you actually took this thing and you split it up from here to here, all right, there's 25%, 50% right there. It comes back into 25% of that and then continues down. So that whole fair value gap, you only got 25% of it. So you have 25, 50, 75, like Michael says, and then the full thing. So there's the four different stages.
As a robot, you'd be a wild card in E1, basically.
Yeah,
right?
you would have wild card in E1 for sure. Yeah. And then you would have continued on the downside. And then the bot would have peeled you out at that low or whatever low's back here. And the bot, for those of you who are interested, is something we'll be discussing later on in our Breakfast Club. We do have it, occasionally you'll see it pop up on a screen. You'll see a bunch of stuff down over on the side here. That's the bot. We don't run it all the time, but when we see a key spot, we can use it. We're just kind of doing manual trading now. But when the bot goes, it can...
Well, you can also, I have the bot on a lot of my platforms, and then I just do manual. Wow, you got a trade in there. What was that?
That's all that long gas trades.
Oh my
I've
gosh.
had on for a long time now, so we're gonna see how these. I've got that on for. That's my long trade for.
Holy mackerel! You got trades up the gazoo.
Yeah, it's a whole bunch in there, but I'm just letting.
It's almost painted.
Yeah, there's a bunch of trades on there for.
Looks like gas is going up today. That's good. Oil's probably going up too. I don't know.
Oh yeah,
Let
what's
me
our
look.
I haven't even got oil on here.
Oh, you got to have oil. That's the inflation of going into the future.
Can I even put oil on here? I don't even know.
Yeah, oil's down 27, 79.51 on TradeView.
You can't get oil on the Fivers account,
Oh,
sadly.
you can't? Okay. Good to know.
Yeah.
So does that mean you can't trade oil?
No, I can't trade oil on here, no.
Not on the Fivers account. It's one of the downsides to it.
I have a question. On Fivers, do they have a demo, or is it just all you pay $50 and you're in?
Well, you can use a demo from anyone else if you wanted to. It's
Okay.
literally the same thing as everybody else.
Yeah.
Okay, yeah.
So you don't really need a demo, and I think that's probably, I don't think they offer a demo. So
Okay. I was just curious.
Yeah, it's like $50, right? So for a $5,000 funded account, you hear all these people, you hear all these people running for a $100,000 account, and it's like, look, dude, if you can't make a $5,000 account go, how the hell do you think you're going to make a $100,000 account go? Who cares if you got huge leverage? If you know what you're doing.
Right now, I'm at the point where I can't even make it on a demo.
But that's what
So
we're
I
here.
don't need a Fivers account.
We're here to read the tape, have some fun. We're not here
I'm
to.
doing some testing. Yeah, I'm doing
Yeah.
testing.
That's
And so
great.
that's what I wanted to ask you about earlier is these big downs buying at the bottom, okay, and
Yeah,
then going
that's-
back up. What would you do if you were going down like that, okay? My idea might not have worked. What would you do when you have two big candles like that coming down? What do you do at the very bottom?
Okay, well that's what I described yesterday in my my analysis when I talked about the prediction.
Yes,
That's what I gave you
it's
yesterday. That's
very
what-
nice prediction. Okay,
Yeah, that's what I was.
that's what we talked about earlier.
Yeah,
Okay.
that's what I was kind of lining up for the day. Where did my 15-minute daily go? Oh yeah, okay. So this was your run down, 15 minutes, right? We got the slow run up. So when you're looking at the 5-minute chart, this is what we were kind of looking at for my. We had it run up into here. Yeah, because I was looking for it to come back down here, right? So we had it run up into there. That was the peak. You come back down. We wanted one to stay the right here. Sorry. We said we're going to come up to here. This would be the breaker. And then it would come back down. Didn't do that, but it did hit our second point, which was come back up to clear the fair value gap. This one right here and this one right here. We ran back up to and then we came back down to the breaker right there. The wick, anywhere inside that breaker is what I'm looking for. So wick, body, threshold. And as you can see, it came all from the top all the way back down, hit it perfectly on the bottom of the fair value gap inside our breaker, and then reacted off exactly as we predicted and start to run back up. Now we're looking to get support on this and continue our push up. So that's where our entry went in today to go long. We wanted it to come back. So when we go see this breakout, come back down, find some support at, again, the top of that fair value gap. And then we want to see it slowly start to, or not slowly, but we want to see it start running up now. So we got in right off of what we figured was the silver bullet for the day. Top of the fair value gap's what I was calling for here. I got in a little prematurely, or I'd say right at the fair value gap. Silver bullet, what we were talking about, and then we're looking to go up from there. So that's where we're sitting at right now, Preston.
That's where I'm at too. I've got a trade in there as well.
Nice.
Just a little bit lower than yours.
Nice.
Yeah. Also, by the way, you know how I called it going up yesterday at the end of the day there?
Yeah.
My trade, had I left the stop loss where it was, this trade would be working this whole time.
Yeah, nice.
I'm like, but I took it off because it broke the down a little bit.
Yeah.
And you were calling for breaking the lows, and I was like, I'll just cut it and take a smaller loss.
Yeah.
But darn, I had the whole run here.
Yeah, don't beat
Otherwise-
yourself up over it, man. You made the decision, you took it out, and let it go.
Yeah,
Yeah.
no,
Yeah, because you beat yourself
and
up
it was
every time
against
you
my
get
rules too.
Yeah.
It was against my rules because it wasn't in my time frame. It wasn't
Right.
anything. So it was a good cut, but it's one of those like I'm looking at it going, I had the bottom.
Yeah.
No.
Yeah.
Yeah, because I got in right there on the left there. Yeah,
Yeah, this is. I think you're looking at getting in up here, and I was like, well, just be
right
careful you
there.
don't get a
Yep.
retracement back, right? So this was my concern was that this fair value gap was still open, and we still had these equal lows down here that it could quite easily run out. So, like Michael says, you won't see a bottoms. Bottoms don't stay like this for very long before something takes them out. So there's always that inherent risk of running all the way back down and taking that crap out, right? Because we look at on the hourly, if we're looking at a 50% retracement of this entire range that happened here yesterday, we're coming up close to it. So you could get a 50% retracement coming to that premium area here and book it all the way back down again. So I'm going to be taking off a portion right here at 50%. Just to make sure I pay the trader. As soon as we get above, actually I'm going to take some out above this high here, and then 50%. I like this fair value gap sitting over here. That's also sitting at 50%. I love to look through candles at fair value gaps that are sitting on the opposite side, because you'll find that they line up a lot of times. They will line up as points of, okay, what's overlapping this 50%? I like to cut back all through this thing, look for the breakers, look for the old highs, old lows, look for your PD arrays. What PD array could support price there? Well, that becomes an inversion, right? When you go down below it, you come back up to it, tag, find support, come back through it. It's inversion now. You come back, tag it, and then you leave it. Now we blew all the way back through it. A lot of people say, is that thing's expired already? It's done. It's like, oh no, I like to keep an eye on it because strangely enough, it lines up with precision. That one there lines up perfectly there. Now somebody who's watching this right now will say, yeah, you're full of crap. Whatever. I don't care. That's what I'm looking at. So
You're full of crap. Did that work?
Yeah. You're full of crap. Did it work? Yeah, it did. So whatever.
You got to go to the bathroom now?
Yeah. Wear your diaper. Here we go. Yeah. So our bot, let's see how our bot would have done off of that. Our bot would have, where would we have gone in here? 17, 20, 12. So this would have been short. No, it would have lost here. Yeah, it would have lost there with the spread. Then you waited till 17:30. It would have got here. Yeah, it would have seen this guy here. Would have got you wildcard entry here, right, pretty much where we're sitting right now. And then you wouldn't have got E1, so you would have got wildcard entry at least. And then you'd be, depending on what time frame you're scaling out at. Yeah, you'd be a little positive in the bot right now.
Are you running the bots, Steve?
No, I'm going to start. Well, actually, I did today, but it didn't trade. I was going to. There was an announcement out of the euro this morning early, and I tried to run it on that, and it didn't go.
Yeah, you don't want to turn. When you see this kind of crap, you don't want to turn the bot on in this. You're just looking for trouble.
Yeah, no.
Look for better, cleaner price action, because this is not clean.
Yeah, I was actually looking at the euro, not on this. No.
Yeah, this is definitely not clean. So.
No, it was a euro.
How's the euro doing anyway? Look at that.
I was just going to look at it right now. So are you looking at it?
Yeah, right here. That was the pocket of breakaway gap we're looking at.
Yeah. Yeah. See that? That
came all the way back down.
That was a pretty good run right off that fair value gap right there.
Yeah, right
That's
into
a
that
beautiful entry.
right into that breaker, right? We got a body above the breaker, came back down to it, hit it, and now
in that fair value gap.
Almost hit the fair value gap. It was pretty.
No, the one right above it. The other one.
Oh, this one here, you mean?
Yeah, there's no, not that one. The little one. You're.
Oh, in here. Yeah.
Right there. That one. Yeah, there. Yeah.
Yeah. Yeah, that's a nice fill right there. Right back
Yeah,
into
that would have
little
been
fair value.
that fill right there. That would have been phenomenal fill right there.
Yeah, it would have been a nice little entry, and that would have got you so far 34 pips.
Yeah, and you're sitting at
Shake your finger at.
No.
Yeah, and you got a fair value gap right over there that looks like candy.
That's
potentially.
$300. That's $300 on a lot. So
How did you figure $300 on a lot?
well, 34 pips at one lot
Oh,
is
I see.
$340. Yeah,
Gotcha.
and see that the pound's doing the same thing. Look at this
But
one
it didn't
here.
come all the way down to the fair value gap like the euro did.
There's your little fair value gap right here. Let me just grab this guy, put it up here.
Oh, I see. Now you're making your own fair value gap.
Right? See that little guy right there?
Yeah.
That's the one Preston was talking about.
Yeah.
We wicked right into it, into that breaker.
To that breaker, yeah.
Hit it.
Okay, so
And
so
then-
if you would have taken that, what was that? The other one was
from
34
here,
pips.
If
Yeah,
the bottom of the breaker two right here is 35 pips.
it's about the same trade. Okay.
Yeah. So this
Do you play the
No, that
pound
was
a lot?
euro.
that was euro. Yeah. This is
Oh,
this
that
is
was
pound. This is pound. So you got
And that's consequent encroachment of the fair value gap that it pulled into.
of which
You
one?
guys play the pound very much?
No.
There you go. See, consequent encroachment.
This is the consequent encroachment. Oh yeah, that's beautiful. Look at that.
Yeah.
Yeah, that's beautiful. No, I don't play the GBP, even though I'm from England. I don't play the GBP. I got beat up in that a lot when I first started 2016 with Michael. It's like I did all the things you shouldn't do. You know, Michael's like, don't trade live. And I'm like, I got it, man. I totally understand you, dude. There goes $1,000. Oh, I'll do it again. I'll stick with the British pound, mate. It's mine. I've been around the British pound a long time. So I took it. And I got raped. The British beat me, my fellow Brits.
Well, your problem is you moved out of Britain. That's what happened. They're
Well, my
punishing
problem
you.
was I was trading live after 1 month of being with Michael. He was so convincing that this was so easy that I was like, if he could do this, I could do this. So, man, I went in live and like right away lost my money. And it's like, oh no, just do live again. Live. I pretty much paid for my tuition through just live trading. I just kept making the same mistakes over and over and over again. And I spent thousands of dollars blowing it live when I should, and all the stress that came with it and all the worries that came with it. And he kept saying, don't trade live. You're not ready. Go for a year. I'm like, a year? Are you kidding? That's going to take way too long, man. So in my infancy, and I knew absolutely nothing about the markets. And I was making all the mistakes. And it's almost like Michael's in your head telling you psychologically exactly what you're gonna do wrong, and you do it. You just go, no, that's not me. That's those other guys. But no, you get nailed, and you go, yeah, I should have listened. And in the end, you end up fighting with yourself more often than you do with your trades. And then you start, if you do that, if you go through that crappy way of just unloading your personal account, your live money, and you get all the stress, you're literally conditioning your brain to react every time you put money on. You're not even demo, you're live money. So when it hurts live. And that shit ingrains into your head, into your neurology so bad that you become punch drunk, right? It's like a boxer, you become punch drunk.
The only way you can stop that is to stop it. And that means get out of trading for a while.
Yeah.
And I'm not talking a day or two, I'm talking months.
Yeah, because you start to get into the...
I've had that problem.
Yeah, all the classic stuff like your revenge trade. You say, I'll come back harder. Exactly what Michael talks about. I swear, if that guy could write a book just on the psychology of trading, because he literally talks to your brain.
He can do this, I can do this shit.
Yeah.
And then you blow it and you go, well, no, that was a mistake, but I can fix that mistake. And then you blow it again. And, oh, I can fix that.
And you don't do
And then your stress is bad, and then you go tell your wife that you lost half your savings account.
Oh my God!
And she's like,
the gamblers. The gamblers mentality, hey.
Yeah. Actually, that's what happened. I wasn't a gambler, but in penny stocks. Remember back in the penny stock days? Back in the oh man, they wipe you out.
Yep.
They don't even have penny stocks here anymore. They had it in Salt Lake and they had them in Vancouver. I don't even know if they still have them up.
Oh, I got into some penny trades. I got into that Brett Wilson, that billionaire we got up here. I got into one of his trades. He was actually the CEO of the company. I was like, well, he's a billionaire. He's going to do it. So he got into it. I piled in, like 150 grand, 160 grand. I piled in on that thing. I thought, man, you go with the guy who knows how to make money. Fucking law. It was a penny stock. It was an emerging oil.
Yeah, for him, he's a billionaire. So the amount of money you have invested and everybody has invested in his penny stock is toilet paper for him.
Yeah, it was just a fart in his pants, man. It was nothing for him. For me, it was holy crap. That was a massive. And I didn't know anything about investing, obviously.
Yeah.
And I just went.
And then what you find out, and then what you find out later is he got in at 0.00001 as an inside deal.
Exactly.
And he's pumping the thing, and you're buying in at a dime, and you didn't know he got in at 0.001, right?
Yeah.
He's already made another billion off of you.
Yeah. He made his. I don't know if he made his money. He was apparently putting his family's money in it, or putting some money for his kids in there. Mind you, he could afford that kind of hit. There's no way I could afford it. So it took me a long time to recover from that. So you end up getting seriously punch drunk in your losses, right? Yeah. And it really affects the psychology of how you trade. And
oh man,
you've got to trade demo until you feel comfortable enough to be able to risk a little bit.
I'm of the opinion sometimes you just need to get away from trading totally.
Yeah.
And just leave.
And if you've got one of those addictive personalities, trading is not for you.
By the way.
Yeah.
Yeah.
If you can't get a hold of the psychology inside your own head, trading's not for you.
Yeah, you really need to just stop. Yeah. That's what I have to do. I have to just stop.
I got to bandage up my wife's leg here. She's sprained her ankle.
Okay.
I'll be right back. Sometimes you got to be a paramedic. Stand by.
Okay, I got to leave. My wife's here, so I'll talk to you guys Monday, okay?
Okay, man. You still got your trade on?
Yeah.
Yeah, make sure you
why don't I just stick on? I'll just stick on. You leave, and I'll go talk to my wife, too, and I'll just stick on. Yeah, it's running.
I'm just going to turn my mic off for a second here. Preston, you can chat away
I'm
if you want.
turning mine off, too.
So I can talk to myself? Nah, I'm good.
Well, it's better to talk to yourself than play. Yeah, Carla rolled her ankle the other day painting the fence. What's this side?
Oh no, I'm sorry to hear that.
Yeah, she's you get a principal of a school and you end up working your ass off during school years, and then you come home and you're painting fences, and
And you roll your ankle
You
painting
roll
your own
ankle.
fence.
Meanwhile, your husband's inside trading the markets while you're out there slogging away on the fence. What is wrong with this guy? How's it feel?
Good.
Good?
It's much better having it on.
Good. All right, there you go.
Well, coffee for me.
Good.
Love you.
Love you too. Have a great day.
I'll see you in a bit.
All right. Oh, look at that. We're doing all right.
Yeah,
You're-
it looks
you're
to
still
be
in
doing
this?
good.
You're still in this?
Oh yeah.
Good. Good.
Yeah, I pulled my stops up to break even. Whoops. That might not be a good idea anymore.
Yeah, you gotta be. Remember, this is not really nice price action right now. This is just chop, chop, chop. So, we have to weather something. Did we break that high? Shit, we did, and I didn't.
We did break.
I was wrapping my wife's foot, and I should have taken a piece out right there.
Yeah.
It's okay. It's coming back into this order block here, back into this breaker. There's a swing here, up, close candle, down, breaker, find support. I want to see that guy hold that price right there. See how see how that low is inside this candle here. This is the guy I want to see hold price right there.
Yep.
So see how we've come up into it here, we've hit it, come away from it, come back, hit it again, and we're slowly starting to dig our way into it, come back, hit it, and then drove through it. Now we're going to come back to it. So that's what I like to see here is I want to see it push through. We come back, tagged it. Now let's just keep marking time, moving forward.
I would have liked to see it go a little bit higher with a little bit more velocity breaking it.
Yeah, but that's the problem with this is all chop right now, right? It would have been nice to have that nice punch up, but this is a sloppy price action this morning. If it does grind, it's just going to grind its way up slow, right? So this is
Slow
high
grind.
resistance liquidity run for those of you who are out there trading right now. This is this is called pain. It's a painful kind of ride on the 1 minute bus here. How's the 5 minute? Now that is not a breaker on the 5 minute. This is the breaker. Down, close candles, run back up. So that is inside that 1 minute. That 10-minute breaker right there, running above an old high.
That's the breaker in the other direction.
Yeah, well, this is still as you come back down to get support to go back up, right? So we could come down as far as that. I'm not that I want to.
Yeah, I don't really want
I
it
still
to
want
come
to see
down
it there.
that
I
far.
want to see it starting to get some legs up now. What else have we got here?
Yeah.
Yeah, we're starting to
I
get
don't know
on
what.
into this fair value gap. I like this. So if we can see now, because we've got a bold candle ran up, came back down. We tagged the top of that fair value gap again on whatever that was. I think that was the
Hourly or something.
hourly. Got some support at that and starting to push up into this one now. I want to see that get some support here now, right on the edge of that, which is our 1 minute breaker. See how they kind of line up from the top of this or the bottom of the fair value gap here and here.
Beautifully.
So I want to see, as we've got that support now, I want to see that push up into here. And this is the kind of guy I want to kind of work off of now. to get some support into that 50%. Now we're going to hit the 50, roll over, and start pushing up into the higher stuff. I don't know, just because of how sloppy that is on the 1 minute. We'll take a portion off there anyway.
Yeah, you should pull a take profit up there or something. Or can you do partial take profits with this program?
Yep. Yeah, I can just go up into here, double click it, take off a portion.
Yeah, no, you can take off a portion, but can you put a stop loss, a portional stop loss?
No, you can't. Oh, you can. Yeah, of course you can. Absolutely, you should be able to right here.
Or
Stop loss.
You got a stop loss for sure. And there's not multiple, it's just the one, yeah.
I don't know if you can market execution, because as soon as you hit close, it'll close out all of that. So what if you went down to 0? No, you can't.
No.
You'd have to move that and your stop loss at the same time and take a portion out.
Yeah.
Close it.
Not
and then kind of bump that up to 59. Take a portion of 1 off there. Yay.
Woohoo! I just took a portion.
Yeah, it did not move my stop loss though. I'm going to move it to break even. There we go.
Yeah.
Now we're moving.
And I took a 50% take profit. All right. 2 little pieces. Woohoo. Now if it reverses, I've got a decent amount of profit.
Did we hit the 50% mark yet?
Yeah, I think mine... Oh, it was just shy.
Just shy of it. Yeah, I'm going to wait a little bit more in.
Oh, wow. I must have put my 50% in a different spot than you. My fib, I mean. Because mine's a little bit closer than that.
Is it?
Huh.
Oh, mine might not be like right on the money. Standby. Yeah, it's still a little short.
Yep.
Some people, you might have pulled it from here. Did you pull it?
No, I pulled it from the top. Just the one on the left there. The next one over. Yeah, that one. Is that the one you pulled it from?
Yeah.
Yeah. I think my lines actually might be thick.
Oh, I see.
Yeah, there we go. Well, this is a lot of fun. This is not the fun kind of market, that's for sure.
Bit sloppy.
Sloppy and slow. It's a slow burn here.
Back into the breaker again. We have a break order here. Let's watch this swing here.
Yeah, because that could be a chalk. Closing your
mode.
position?
Yeah.
Yeah. Alright.
Yeah.
I'm gonna leave mine on until it hits break even, or
Yeah.
if it's like it stops me out.
I didn't have a lot on anyway. I was just playing with it. I like this. If we get a swing here, that becomes our next little breaker. See,
Yeah.
see how the bodies are respecting that threshold.
Yeah. It's nice.
So we'll see how that holds.
I got my stops just below that that consolidation your line is on.
Right here?
Yeah, right there. My order's just a little bit below that, so.
Your order's below it?
Yeah, just in there.
Oh,
Yeah,
good.
there. So, it'll be changing direction. More than likely changing direction if it takes me out.
Yeah, if we see a body break down below this swing here, if I see a big body candle get down in there, this becomes the breaker inside the fair value gap for a short.
Yeah, that could be a beautiful one.
And it's the 18 candle reversal too.
Oh, is it 18 candle?
Yeah.
Oh, yeah.
It's 1800 now, so, and we're coming up to 1812. There's the another silver bullet set up for 1800 for short.
Yep, that could be a.
It could be the silver bullet reversal, but I want to see a body get below this. I know that there's this, the wicks are good, but for me, I like a body. And then we could be returning back into this cluster of consolidation here below, into that little fair value gap that's sitting right in here.
Yep.
And don't let this influence your decision. You know, stick with whatever trading decision you want to make, but just kind of keep in mind that if we do get something like that, look for this little guy down here.
Yep, that's where my entry is, basically, right there. So my stop losses are right there, so if we go down to there.
Here we just keyed off of that breaker, or that, not breaker yet, but we keyed off that order block inside the fair value gap right now. We didn't break the low, so for me it's not a break-in structure.
Nope.
But it is
not a powerful one if it is.
It is a return to order block entry.
Yeah, actually, it is a return to. Isn't that a breaker on the left-hand side? The green box you just made?
This is the breaker, yeah.
Yeah, that's the breaker. So it's a return to breaker. So it's a breaker to breaker trade.
So if we're looking at order block, trade, breaker, if that actually popped below here, that would be breaker, breaker. You're inside those two, right? So I like this idea that this is a potential reversal here. We have order block. This could be an optimum trade entry. No.
Yeah, I'd be waiting for a bit until it actually shows on a higher time frame.
This could be just this banging around sideways here. I'm just trying to. I want to see something get below here before we start calling this things that it's not.
Yeah. Prognosticating.
We're still inside this dude here. So we'll see what happens.
Yep.
I got to start learning how to put some things on my chart, some texts, so people can see who the ThetaWaveTrader is. My live charts are my live charts on YouTube are just empty charts. There's no pictures, nothing, no flash, no pomp and pageantry. It's just charts. And I got up here signals. I'm just trading some signal stuff. This is the ThetaWaveTrader who should live for July 28th. You know, I've got nothing and no flash, no nothing. I look at all these other guys on YouTube and they get all the flash and stuff. I don't know how to do all that stuff
Yeah,
yet.
that stuff comes.
Yeah, well,
I mean,
I'll look back
the
on
fact
these
that
one
you're,
day and
you're
go,
going live and you're doing it,
yeah,
like you're just doing it.
yeah. It's like Michael says, man, it's hard to call it live. You know, you've got a lot of pressure on you when you're doing it live. So
Yeah.
see how we're eating through this breaker now? This is why I like the idea that this is a, when you see that pocket sitting right there,
Yep.
the bot would have been all over that at 12. The bot would be right into that. You would have had wildcard E1 and E2 entry on that.
Yeah, I'm liking that that formation that's happening now for reversal.
And we've just
So-
popped in here. That makes us a breaker now, right?
Yep.
So order block.
So if it gets a good push down now, we could look for it going below that order block or the breaker,
Yeah.
coming back into the fair value gap.
So look for this here. See how the threshold of that was being respected? Now we've blown through it. We came back, hit an order block. Now we're blowing through this thing. So, and it's an 18 candle reversal. So be careful that this isn't just a full reversal pattern here.
Yep. It's possible. It's very possible.
We'll wait till that breaker gets eaten up. You're pretty much there now anyway. And you got a few little
Yeah.
bits of the wick left. And it's not even 50% of the wick, so to speak, right? It's like eating the wick up as well. So we're back into this order block again. Does that hold price? Threshold? Rejection block?
Yeah.
Wick?
On a 5 minutes, still holding
Through. Now we got this fair value gap fill. Now we got consequent encroachment, or threshold, I should say. Now we see if the bodies hold here. The wicks come up, do some damage, and come down, or do we push through and continue on the upside? You're still in this?
Either direction. Oh yeah.
Good,
Yeah, I'm
good.
still in. Either direction is possible at this moment.
Yeah.
Either one looks optimal. I wouldn't be getting into a trade here,
No.
but
It's been super sloppy. The fact that we've had to weather all that just to get to here,
yeah.
it's not for me to keep playing and shit like that. So I'm gonna wait for something bigger, nicer. This is pretty sloppy choppy. So there's the bodies are respecting the threshold.
Yep.
So if we lose the
I'd actually
threshold,
take one off.
this is just another fair value gap. We broke above here. Fair value gap coming back into it. So are we getting support here to go back up? But we're between this guy here and this guy here, right? This order block, these two order blocks and that breaker. So are we just going to come back in, fill this, and then say, well, this is a breaker because we have a last down close candle before a run above a high. This one runs below a low here. So we're like breaker to breaker overlap here. So you're just kind of banging around between these two. So it's got to decide. We've already hit the premium of this. And now we've come back and tagged the top of that. So we're kind of just going to make a move now. Up or down. Make up your mind. Where do you want to go, right? This is when it gets...
It's gathering orders in one direction or the other. Or
It's high
screw with
resistance, right? High resistance right now, so you don't know what it's going to do. going to break one direction. It's going to run out of little PD arrays to bounce off of here. So it'll go between that order block now that is created and this guy down here, inside that breaker, at that breaker. So you're going to bounce inside this fair value gap. So you're pretty much running into these 4 different arrays that are occurring inside that fair value gap. So we're waiting for a breakout of something. And I know this is not how Michael actually analyzes the market. He's probably looking, if he ever listened to this video, he'd be like, dude, you're on crack. You have no idea what you're talking about. Okay, so now we're stretching up past here. So that's how I'm kind of looking at this. We've come back into the order block, fair value gap. We've run out of the PD arrays inside here. We're at the consequent encroachment of that fair value gap. And are we going to extend this up now? Are we going to start to push for a higher run into the rejection block up here? That's the next, over this PD array. I want to get to that one there. Then you've got the little wick prop, all the PD arrays within the wick. Or are we just going to roll over and come back into this consolidation again?
I like it for the upside now again. Looks good.
Yeah, that's way too sloppy for me. Our higher time frame objective, that's where you're going to say, what am I trading on? Am I trading on the higher time frame objective? Because we can take more of the slop out when you start to go to higher time frame stuff. So 15 minutes.
Yeah, I'm on the 15-minute. That's what I'm watching.
Right. So then the 15 minutes coming back into your order block. Now you could say, yeah, we could be starting to push up here now. You're finding support off this order block. We got the wick, finally broke this, validated this as an order block above. You come back down into it to go long. But you can see how sloppy that
good
is.
Upside potential.
Yeah. Oh yeah. Well, the 15-minute looks nice if you're willing to sit and watch 15-minute candles. If you want to do 1 minute super scalping, you see how sloppy that is on the 1 minute. It's like painful to sit through all this shit, right? It's a slow, steady grind up. But then when you say, well, I'm going to trade on the hourly and I'm going to execute on the 15-minute, then here's your entry.
I'm trading on the 15-minute and executing on the 5-minute.
Yeah. I still like our entry here. We got up above it, came back down to the 1 hour candle, and you'd say, okay, if I'm trading on the hourly, that return, what is that? Did that happen on the hourly? No, it hasn't. So on the hourly, we still haven't come back down and tagged this. We've got a fair value gap now. We have a fair value gap. We broke above it. We have not come back down to it. And we're starting to work inside this guy here. So if we have another little breakout with another fair value gap that ends up, or sorry, another order block here that reverses and comes back to this, and we keep this open and then push up, that'll be a nice breakaway gap again, right? On the hourly. But even that
looks beautiful on an hourly.
Yeah, that looks pretty sloppy though. So look at these wicks, up, wick, all the way back down. That's sloppy.
Yeah.
So I want to see this clean itself up a little bit, get an order block in here, come back, find some support here, which is right around all that other shit that we've got down at the 1 minute, all those blocks. Leave that open. If not, 50%, which is 50% of that wick. And then we have a further run to the upside. So we'll see what the 19 candle is. Looks like you're going to get some more action out there in the 15-minute.
Woohoo! Look, it's working out on the 15-minute.
Yep.
Oh yeah, I shouldn't have gotten out.
Did you get out? Did you scale everything out?
No, I didn't scale everything out. I just I took off another portion, so I took
There's
3 of
50%.
my 5 trades out.
Okay.
So
Nothing wrong with that. There we go.
hallelujah.
This is when you can't, the psychology of yourself saying, coulda, shoulda, woulda. I have an engineer friend of mine that whenever he made decisions about major engineering decisions, he would go, what is the information I have right now? What is the best decision I can make with all the data and information that I have right now? Make a decision, move forward. Then all of a sudden you get new data. And this is where people beat themselves up. New data. So you're giving yourself new data now, and you're judging an old decision based on new data, which is unfair. It's unfair for your brain to think that way, and it's unfair for you to beat yourself up that way, because now you have new data that supports a decision you made. If it was positive, then it's a great decision. But if your decision was to get out based on a retracement or whatever, and you said, you know what, I'm out. That was the decision based on the data you had. You didn't know what was going to happen in the future. You can't beat yourself up on decisions you made back here with this much data. This much data. Now make a new decision, because if you said, I'm going to go long, and it crashes on you, then you'll say, oh, I should have stayed in. Well, that doesn't serve you. So you got to really think about how you talk to yourself, because you're a super smart guy, man. I don't want you to see you beat yourself up. You're in a great trade here. That breaker held all the way down into here. I love it. On the 1 minute, that sucker held all the way down to the bottom. Look at that. We still stayed inside it. Got on top of it, came back, found support, and kept driving up.
Yep.
Nice.
It's good.
So
Beautiful.
now we have another fair value gap. We have a breaker now. We come back, find support at the breaker.
What are we on? 1 minute on yours? Yeah.
Yeah.
Okay. Yeah, because it's still just a really big candle on the 15.
Yeah. That filled the gap.
Beautifully, too.
Mm-hmm.
You know, when people say it's not predictable, look at that gap fill. It's to the pip.
Mm-hmm. And then what did it do? Validate this as an order block, came back up, tagged it perfectly. So now if you're looking at how price is kind of bouncing around, it's hitting these arrays, coming down, hit this array. Now it's saying, okay, now I got to go. I got to expand. Either to the upside or downside. You'll see it bounce off specific PD arrays. So here you got the next one back down in here. There's an old high. That PD array, the body, then the threshold. Does the threshold hold? No. Go up to the rejection block.
Now we're back to the chop.
Mm-hmm.
Wonder if Steve is still in the trade. You here, Steve?
Is Steve still here? Yeah, he's around.
It says so on the... He might be just
Kind of
On
better.
the call, but not on the
It might
call.
be better that he's out talking to his wife. He'll come back and say, "Woohoo! I made some money."
Exactly.
Walk away from the
Look at
charts,
all that
man.
money.
Don't obsess over it. Walk away from it.
Yep. Sometimes it's better just to walk away.
Bless the trailing stop if you have a trailing stopper.
Bless it.
Blessed is the trailing stop.
Yes. I suppose I could bring my stop up a bit.
Well, if you're in profit now,
Yeah.
just look at when you look at these ranges now. Just start saying, okay, what's if this were to turn around? If this was the range from there to there, 50%. Well, look at that. It brings us right back into this fair value gap here. So if I was looking at that small little leg there, and I want to see it come back into a discount to go higher, what areas down here could I get that are discount inside that little leg? So I look at that. That's sitting right at 50% closure of that fair value gap. We have an order block here. We have a breaker sitting right there. So a full, mind you, you'd use all three of these candles for the breaker. So you get right to the edge of that thing again there. If you came all the way down to the bottom of it, you don't really want to lose anything more than the wick or the body close. The threshold coincides with that one right there, that old high inside the order block. So I'm kind of looking for what kind of discount can you get in here.
Yep. It'll probably come into this fair value gap right there.
So look at that. We caught the edge of the fair value gap. Back up into fair value gap here. Popping in again.
I'm super happy with this trade. This is actually a really nice trade, even though it's like it feels super choppy and sitting here is kind of annoying. It's working really nicely.
Well, if you're positive and you're break even, then it's a zero stress trade, right?
Absolutely zero stress. I've got money in the bank, and I'm well into the profits with my stop loss. So.
So you see how I said this high and the body? Look at that. Comes back to the body, and we've got a nice reaction off that body.
Lovely.
So now are we just coming back up to dig back down into it again in the 50%? Are we looking for some discount in this little tiny leg here to push back up again? Because we just, that wick there validates that as an order block. So it's just come back into this candle's body. And now we're looking for here and here. We're kind of stuck between those two candles now. And literally bouncing from PD array to PD array, up, down.
Yep.
And you just got to look for, just keep watching how it goes from one array to the next. And then it starts to say, okay, now I have to expand out because I've run out of PD arrays. Unless you go down to a 30-second chart, you'll see more little tiny ones in there. But this is them running out of the 1 minute ones and having to expand or drop down into a range. So this is just kind of looking at order block, bouncing around between order or block PD arrays. And when they start to form little ranges and little swing points, and how you have reference each one of these new swing points.
Yeah.
So you can see how they kind of there's your down, or your bullish order block. You validate it when the moment we get below it right here. Then we came back up to wick body. So we hit the body. Then we came back into the threshold of it. And then we pulled back down around it, so away from it. We create another one. This is a new order block here. The moment we pop below it right there, you come back into wick body threshold again. Start coming back down, and now we're starting to look for where's our next down close candle, because these are all up closes, fair value gaps, all that kind of stuff. And then when do we validate this up close candle, or sorry, this bearish order block? It gets validated the moment we get above it, right there. Okay, so now we're above that one. So now this says we got these guys here to come back to, because now we're going to break into the, we run out of PD arrays in here, right? So now we're looking for higher stuff. So you have to expand either down or up when you run out of these arrays. So they just ran up to rejection block into the wick.
Yep, it's letting people get back on. And then should push again.
So we could see it come back down into here. Or does this create another new little fair value gap in here? Find support, leave it open, start pushing up. Or does it come back into here, find support off this order block? There's your high.
Yeah, because it created a few more PD arrays for it to play with.
Right. And then it starts to eat through that 1, 2, 3 PD arrays. Right off the threshold. Now where are you going to go? Well, you've eaten that one up there. All you've got left is either more downside or start pushing for upside. We could revisit this threshold here one more time. We've come back into that candle's body. So we're just retapping the same PD array. Do you see how consolidations are just go around PD arrays, create new PD arrays, back and forth, back and forth, back and forth?
Yep. It's just PD array to PD array until they run out of PD arrays.
Yeah, and then they have to expand. Or they're just booking, just running in between, just keep tapping the same ones over and over and over again while they're building book on both sides.
Yeah. Which I think is really the purpose of it, is to create a book on either side. And then it's going to run out one side and get the people in the wrong direction and then push the other way.
Look at that, right back to this old high here. Body, wick.
Sheesh. It's not doing much.
No. Is this your 15-minute candle rolling over again? Yeah.
Yep.
You're rolling over. Are you coming back into this right here? So that's 1960. Or this old high right here, 1961.
Or any of the other three PD arrays between there and there?
19.
This is hitting the wick.
61 is right in the right here.
Yep.
So now we broke below this order block and that order, those set of order blocks there. So now it's more expanding down. Not that it's reversing. It's just ran out of PD arrays, came up here, hit your rejection block in the middle of your wick. And now we're kind of breaking down. Bodies never got up there, just the wicks. See how the wicks ran in there? Now we're starting to work out a PD array selection. We have the buy side, now the sell side.
Yep. Getting a balancing candle going on the 15-minute.
We're right back to tagging that spot. You should have tagged the high on the PD, your 15-minute now.
Yep. Just tagged it.
Yeah, right there. Now you're looking at these old highs, and this, they all overlap. 1, 2, 3, and the close of that wick there. There's 62% retracement.
Oh, of your little range?
Yeah, of that little range I was talking about. So I'm looking at this piece in here. If that threshold doesn't hold, which is the 62%, if that doesn't hold, then you're looking for down here, because that breaker is now no longer so right to 75%. So if we see if this push through here now, we have a break-in structure here. We have a body breaking structure. I like seeing that. We're still in the 18 reversal.
Yeah, we could go down a little bit further and still be within the 15-minute, hitting the 50% mark.
Yeah.
At 1960.4.
1960.4. So that would put you right in here.
Yeah, that's the full range 50% that we just created.
Mm-hmm. And we could also be coming back in to reclaim that that breaker over here. Yet again, we came back all the way into it, then tagged it. Look at how nicely that tagged it here. And then away. But now we're eating through this guy. We're through the threshold of it. We've closed below the threshold. There's your fair value gap. Come back into it to get short. I like that little fair value gap there. And there. Watch that little dude right there. You'll see how price, oops. Look at that. See how this fair value gap here becomes an inversion fair value gap? You come back into it right here. Look at that threshold. Bang, perfectly off the threshold. We pull back down. So this thing here, I would like to see that come, find support in here, becomes an inversion fair value gap whilst inside this fair value gap on this side. So is it going to hold price? There's another little guy right here, which is also the, there's a swing there. Body of the candles.
It's still got a pretty high probability of going up.
See, this is where I start getting all bounced around with my fair value gaps, because I like to get on top of them or I get below them, find support in them. I like to use them as ceilings and floors, right? So
yeah,
either they're inversion. So this was an inversion, come up into here to go short. Now we're back through it. Does it find support at it and jump up off of that now? Because what did we do? We just came back into this big breaker from here to here. We talked about that one. And that is 50%. 15, so 75. That's the midpoint of all that right there. Okay.
It almost looks like it went through the threshold of that that's a downward candle just before that big run up, where you've got like 6 yellow candles in a row.
This one?
See that? Yeah, that one. See that one candle right there? That blue one? Yeah.
Mhm.
Is it 50% of that? It almost looks like that.
Yeah, that's right off the threshold of that.
Right off the threshold.
So you're between this threshold here now and this candle here, because that's your breaker. Up close candle before run below lows. So we broke structure, come back up into the breaker. Now we're going to peel around, come back down. So where are we going to come to? Order block, fair value gap. Do we find support at this and continue eating your way through here into the threshold? Rejection block, then you start to work your way up again. This is why consolidations can be a real bugger, but this is a good example of why when you go from one PD array and they run out and then they stretch for the next one, which is further down in the next candle, opens up your little range there, and then you have to come back in and start working all those PD arrays again till you run out of PD arrays. Then you start to expand up into another one. And you don't necessarily have to run them all out. You just have to run out with, you could still have some still left in here, because that's classic, right? We got a PD array down here. We never come back to it. We never touch them, right? It ran out of what it wanted to collect for a price to go higher. When you get in these small consolidations like this and these ranges start to, premium and discount PD arrays start to overlap, then eventually you'll see them spool down smaller, and then they unwind and go back the other way, marking time, as Michael might call it. Not that this is marking time, because we're just coming up for lunch in New York now, so this is when things tend to go sideways anyway. Then we have the macro in the afternoon.
So I'll probably be getting out of the trade here pretty quick, just because it's
just
lunchtime.
When you get into lunch hour, then you wait for after lunch before we get something else.
Yep. But I'd like to see it push before I do that. Just one more break above those highs. That'd be nice.
Yeah, you're inside that breaker here now. And the next breaker's down here. So if we've already hit this breaker. We've run these highs out already. We've come back into that breaker. This looks to me to be the higher probability. If we break that low, then that guy becomes another one.
Yeah.
There you go.
Oh, here we go.
There's your higher probability run there. We just got back into the rejection block of that little guy right there. So now we're going to continue pushing through down into this breaker, and then you're going to be like, breaker to breaker. You're stuck inside that range again. Welcome to lunch hour.
Well, welcome to lunch. Go ahead and sit back, relax. It ain't doing nothing.
It ain't doing nothing. You might have to wait for the macro after lunch.
Yeah.
Yeah, this has been super sloppy. I don't want to be in any of this stuff. But I'm glad you managed to get yourself a piece. A piece today, that's good. If you're stress free and you don't have any you made a little bit of money.
That's all that matters.
That's all that matters, man.
Yep. I'm probably gonna just leave this trade on if nothing else, I guess.
Yeah, if you're in profit, you've paid the trader, and your stop losses break even or above.
Oh yeah, mine's quite a bit above. My my entry is
Yeah, you're down here
low
somewhere,
green
aren't
box. Oh, it's the low green box you got right there. I'm right about there.
Yeah.
I'm just a little bit below that, but yeah.
Well, if you're looking at handles, we've got there's 3 handles there. There's 5 handles up there. So that's 5 handles where you took a piece off already up there.
Yeah.
So that's 5 handles. You could pretty much say, I'm done for the day. I've got my 5 handles. I'm out.
Yep.
Right? Beginner level, entry level, it was a choppy, shitty way to get it, but You got your 5 handles for the day. Pack her up. Wait for Monday, where it's Friday. Beginners don't trade on Fridays. Stay away from Fridays.
Yeah.
It can be quite choppy and messy, unless you're doing Michael's. Thank God it's Friday.
Thank God it's Friday. Exactly.
Yeah.
Which is basically what's happening right now. It's reversing back into the area.
Well, that's the thing, Wade. If we look at our range for the week, we are way into our 50. Like if you look at the
The weekly actually kind of looks like it's just flat.
That's the week range right there, from that high to that low. All in that candle yesterday was the weekly range, because it's got Friday, Thursday, Wednesday, Tuesday, Monday. So that whole thing is the weekly block from there to there, and it all happened in that one candle. So if we say 25% retrace from the low of the week, there's 25%. We're already at 50% of the week retraced already.
Oof.
So we're way. So that for Michael, I think, don't quote me on this, when he mentions returns greater than 30%, it's usually indicative of a bigger run pending. So this was a dig down. Is this a pending push now for a higher run next week? So let's look at that on a higher time frame. Does that kind of give us a way? And I like this idea up here. Again, on our daily, we've been calling this thing for weeks now.
Yeah, for way too long. I got to start ignoring it.
Yeah. You almost have to get back and say, oh, I remember you, my old friend. My friend of liquidity, sitting up here. Right? So we got lots of relative equal highs sitting right here. This Candyland up there. And then you got this big pool of SIBI. Sell side imbalance, buy side inefficiency, sitting right up in here. So are we looking to push that? So if we're looking at this 50%, if what Michael was saying, I think he mentioned this, that if we've got greater than 30% or 40% of the return on the day, that we might be looking at a higher probability of a longer run pending. So basically all I'm looking at right now is we've come back to fill this side. So we've balanced this all out here right now. Are we going to turn around and come back down? If what he says, or what I think he said, is true, then we may be looking for my next PD array, which would be, let's get rid of this dude here. Here's your PD arrays on your daily. That's what I'm looking for upside. So if we get through these three, especially that threshold, we're inside this big sucker here. See how the bodies, these two are inside that one. If you added those two together,
Yep.
we're already through that. So if we take the body only from here to here, do we have any overlap? 50% is right there in the middle. Yeah.
Not quite an overlap there.
Not an overlap, no. But it is in between these two arrays, which still keeps you safe inside there. So we don't want to see this one go, because if we see this, that means we're eating through this big sucker's threshold right here, right?
Yeah.
So we'll kind of keep an eye on that today. I'd like to see, if it does, I'd like to see it close above that. Close above that threshold in there.
That would be a really good
A good indication.
explosive move on Tuesday or something.
Yeah, like Monday, Tuesday,
Yeah.
we could see something because this thing won't be validated until we get above it, right? But it would be nice to see on a lower time frame, maybe a 4. Look at that, 4-hour fair value gap we're coming into now.
Oh, I know.
So
What I've been calling all day.
if we do close below this or close up into this, then we're way above those 3 PD arrays we put on the daily. That's those 3 right there. That's the threshold of the daily. So if we come in and fill that, that's well above the one we talked about way over there, and this cluster of daily candles in here. So then we have this order block, come back, find support at this on a Monday, Tuesday, push for whatever's going. There's a whole bunch of arrays in here. I don't like I don't like to predict arrays that are way past. Even though we did do it, I have to admit, I did do a nice call this morning or yesterday.
Last night, that was amazing.
On this run up, I called that nice, so, which is good. It just took a long time getting there. Did not take out the low we expected, but it definitely gave us the entry that we're looking for, or
that you called for, yeah.
That we called for, not that I actually took, but it's.
No, because it was overnight that it actually did it.
If I was awake, if I was living in Greece, that'd be the perfect place to do this, because then you could be in London, you could be in New York, and you could see all these skookum highs and lows and catch big runs. But I'm stuck over here in mountaintop Canada, so I have to play it differently.
Stuck for a minute.
Yeah. So I'm going to kind of wrap this up here because we only got a couple minutes left. And so I'm going to wrap this up and say, what have we got expected to come up for next week? Next week, what are we looking for next week? So this big sucker's open on the 4-hour still. I like that. We've already broken above this order block here. We've come back into it quite nicely into the wick here, or this one. Now I'd like to see this kind of thing. I'd like to see this next week. I'm going to put this on the 4-hour. Wherever this one ends up. I don't really care where it ends up today. But if we can get back into here and then start doing this. And then start doing this. I'm even going to play silly buggers here. I'm going to try it off the midpoint. Whatever. I think right.
You could toss a fib onto that and get a 50% mark.
Yeah. I'm just trying to predict where a 4-hour block would look like. So I'm looking at this PD array here, the midpoint. Then I want to see it come back, even if it creates a little block in here and comes back into it, find support, or at least find support in here at this. I'm looking at this guy here. This is the breaker. If I come back and find support at that breaker's high or body, so I've kind of given it to the body here, and then I want to see this. From there, I'm going to push right through on that. And again, these are my points. The arrows will stretch out or not as I go on here. That'd be the end of the day anyway. So there. Then you want to see a push up from there. So that's pretty much what I'm going to look for on the beginning of next week. I want to see like a little measure of retracement back into this, inside that breaker. Now that we're above the breaker, I want to see a measurable retracement back into that. Then I want to see a push up into get some sensitivity off the midpoint of this, the threshold of the SIBI. Come back down, find some support again at the top of the breaker. And then start marching through this thing and start looking for the highs, the higher highs for the rest of the week. But that's how I would kind of like to see it working out for next week. On the gold, what do we got for What do we see here, my friend? What do we see here?
A very similar thing.
Yeah, very similar thing. So on the hourly, it looks like this is gonna be the the fair value gap that kind of holds price for the rest of the day. We've had a stab up 3 times here. We're hitting lunch hour now, so whether they run and take the lows again that were created at the 10 o'clock, there's your 1600. So if they run those lows out, come back into this again before coming back up, I'd like to see a run down into here, the top of that fair value gap. Almost to fill this one, leave a little piece open. That'd be really sexy if they left that piece open, and then we'll start to run back up. Right now, this is a validated order block. We've got above it with a wick, but we've come back into it. We're just banging around inside that order block right now on the hourly. I'm sure if you went down to smaller PD arrays, you'd see it banging around inside there. So retail people, if you're watching, that's what we're looking at. A bull flag. I'm not crazy about retail bull flags, but we'll see. If it does, we might see a slip down into here, or at least a third or a half of this wick. If we can get into, I'd like to see at least 25. If we got 25% of that wick and rejected off it and went back up, that would be great. That would show us a lot more strength. To half. If you start to lose half that wick and you start to dig down into here, then we can consider a full run down into the rest of that fair value gap fill. Or not fill, but at least the top of this guy. Do we get support at that and start to leave? Did that sound clear, or did I make that kind of sound messy?
It was a little messy, but
A little
relatively
messy.
clear.
But you understand that this is the wick you're looking for here. So there's inside this PD array, those equal lows. Does it support price or a support price on top of that fair value gap that we're in? Do we continue to get support there and move up? So look at that as your first level of support. If not, then your line in the sand would be 50% of that wick.
Yep.
If it's not, we start to lose that, then we're going to look for degrading into looking for the low of that and coming back into the top of this fair value gap. Do I get support at that to start to run back up again? So I'm still bullish on that one, not bearish yet. I'm still bullish all the time. We're above this fair value gap here.
Yeah.
Right?
On a long term, I think I'm actually becoming more bearish on both gold and GBP, because it broke down below these breakers down on the left side there where your cursor is.
Yeah, over here.
Yeah, because it pushed down and now it's coming back into 50%.
Yeah, it could have just ran down, got the range, right? It cleaned out all these shorts that were going long, cleaned them all out, and now we're coming back into, well, mind you, they built up about a pool of liquidity here. This is what the old retail considers a bear flag, and they're just getting their ass handed to them right now because that little bear flag is not holding on. So are we going to pull back into 62%, 50%? I don't know.
Yeah.
You're right. Like, this is a fair value gap up here on the daily.
Yep.
So that is yet to be finished. This has been a huge bull run for quite some time. So we've come back down into breaker, almost hitting breaker, right?
Yep.
And we've come back into the body. This is a mitigation block, big chunk of mitigation. So that we came back into mitigation block. We also, if you look at I like my rule of my fair value gaps. I just love this fair value gap. I should say mine. Michael's, not mine. I like to look at fair value gaps. They're sexy for me, and I like to look at them for a long period of time. They tell me a story. That top of that fair value gap right there, look at this. We've come back into it. You do cut through candles, and they do provide support for quite a long period of time. Look at this. There's that guy right there. inversion fair value gap. You come up, you come back to it. There's your inversion right there. Off that, break above it. You come all the way back to it. Is it an inversion gap again? Yes. Right now, it's playing an inversion. If that supports it and we continue up, then I don't hold the... Unfortunately, I don't agree with your assessment on really, really short. I like the idea of, does this candle now support? Because we've just come back into the body of it. So you could be right. We could be running further down on the downside to run down further. But I want to see it get through that fair value gap again, come back, find support to get short. It won't be until we get on the other side of that fair value gap that I'd be bearish on British pound overall.
No, it's just kind of in the middle for me.
Yeah.
It's not at a place in which I'm like, I'm sure this is going up at this moment.
Yeah, because if you look at this, and I'm Mr. Fib crazy here all the time, right? Let's look at where we are in the middle between these two fair value gaps right now. We're sitting right on 50%.
Oof.
Literally on 50%, and we're sitting between that order block right there, which we've just came back to the wick and the body. Like the body's just been hit nicely right there. So we've hit the body, and now we've hit this breaker, or almost hit the breaker. We're just a fraction below the breaker, but we're also inside that fair value gap tag. So
we hit that mitigation block on the left side there. At the old high right there.
Yeah.
That one.
Definitely mitigation off of that, right? Because there's no run below an old low here. So we're mitigating off of here. We have this fair value gap. We have an old breaker that's just got a lot of push on it already. This is a strong breaker. And we're on that order block. So where do we go? Do we push through the midpoint of this? If we close above the midpoint of that candle and start to really push, I think we're going to start reaching up for the rest of this. Right? Because right now...
Well, that hit consequent encroachment of that fair value gap with that wick. So it really, really could go either direction in this very moment.
Absolutely right. Absolutely
but
right.
Monday, we're going to see what's going to happen, which direction it decides to choose, because I can't quite predict what's going to happen here.
No, I can't either. No.
Though you're right. We should be in a bullish mentality, or we should be bullish biased, because the entire market's been going bullish for the last, I don't know how long that is.
Since March,
months.
Yeah.
So
is this the reversal for, there's July here. Is this a seasonal tendency? Are we going to start to push back up for further seasonal tendencies for higher summer dollar? Not sure right now for British pound, but I do like the idea that we've sitting inside this fair value gap again. And here's my fair value gaps again. We got here, we broke up through it, we came back all the way through it. Now we've hit the edge of it, and now we've hit the threshold. The threshold happens to line up with the body of the candle, which is the breaker. Last stop close candle before a run below an old low. So we have breaker to breaker trading right now, right? So we've come back into this, so we could roll over and come back down, tag that. So we're literally in limbo right there. I couldn't tell you which way it's going to go. We're sitting 50% between these two. We're sitting 50% of that. We're sitting, yeah.
Yeah, I can make it either direction. I
can
make an argument for it.
So that's where I just go, I'm going to shut my mouth and say, I don't know which direction euros or a British pound is going to go. We're in between. We're stuck in the middle of some stuff here. So do we keep going, or do we reverse and come back down into here? Don't know. That's a long
right.
That's a long drawn out. I don't know. So
Yeah, but
so now
we justified the I don't know.
we played it. We looked at all the things that support it in both directions. So that leaves us with a 50-50 split. Where are we going with euro? Euro, right now we're coming off of this breaker, right? This breaker here, run up. We're sitting in the middle of it. So guess what? We're kind of hovering on a 50-50 one split on this one too. What do you think, Preston?
Yeah, it looks like we're going to be doing the exact same analysis on
Yeah,
that one.
same analysis. We're at 50%. We're in the breaker, 50% of the range. We're kind of hovering here. What are we going to do? We still got a few more hours left of the day. Are we going to start to make a push up? Give us a little sneaky peek above this guy. If we can get above this cluster of candles for the breaker, we may be looking at more upside next week. Or we could be coming back to revisit these old highs, the bottom of this fair value gap. We may come back into this range in here and just kind of waffle. So I don't know where that's going either. We've already hit 50% of the range. So Swissy, who trades Swissy? Who knows? I put this one on here yesterday or this morning. No, last night I put this on there. I was looking at the, what was I looking at? 4 hour? Breaker. No, what was I looking at? Ah, yes, I was looking at this wick. I took the wick on the daily and I made sure I kind of split it down the middle. So that's the daily wick halfway through. Brings us to some equal highs in here. Look at that. Came down, tagged the top of the fair value gap on the 4 hour. Pulled back in. We're back into that order block. We validated it right here. We came back into it on this candle here, right near the threshold. So there's your threshold. Coincides with all these highs. We have a fair value gap over on this side. We have a fair value gap on this side. We have one in here. There's a whole bunch of little overlapping fair value gaps, which really make this a fun kind of analysis. When you've got all this relatively, when you're looking at a 4 hour consolidation, breakout, come back in through consolidation, clean out any of those lows first, then you break out. So we have a nice little run above here, order block. We break above it, come back, find perfect support at the top of it. So there's a body that breaks the high, came back, hit the high, rejected off it, ran nicely through to this order block or breaker, ran right through it into the wick, ate it all up, ran through it. So now, to me, we want to make sure, now we've got above it, we want to see if this breaker holds price to go higher.
That's a breaker and a fair value gap. You see that?
Yeah, breaker, fair value gap.
And then basically a second fair value gap where it should just rejected right off the high.
Yeah.
Off that high. Yeah.
It's almost like a island reversal or a key reversal pattern. So you have a fair value gap here. You want to get inside, you want to stay inside this one here for reversal. So that's like a key reversal, and it looks like a little key. You can see why they call it the key pattern or island reversal pattern. And then continuation on the upside. So I want to see this fair value gap kind of hold price here now, and I want to see this fair value gap hold price. So I want to see the step up off of this. I wanted to see this stay open. So that wick that we saw on the daily, come back, tag the top of the wick, and then leave from there. I don't want to see that get closed, or at least no further than the threshold of that fair value gap.
Hop up to a weekly chart. Take a look at what it looks like.
Ooh, look at that.
Yeah, right?
So
we broke down below the lows way back there.
Yeah.
In 2020 or whatever. And now we're coming back up to them.
Yeah. So if we find some support there, or the bodies, there's the breaker right there. So if we come back into the body of that candle, eat through that wick to the body, equal lows, breaker. That breaker puts us right. If we ate that breaker up, oh, we could fill that whole thing and still be inside that whole breaker right there. which would put us somewhere near the middle of this wick.
Yeah.
Anyway, yeah. So I see more a little bit of upside coming here for the U.S. Swissy. So that tells you got more upside for dollar. That would be more upside for dollar, downside for all the other currencies, right?
Yep.
Interesting. So we'd see. Does that support our euro? Oh, we didn't know what was going to go on with those two. Right.
Yeah,
so,
but we didn't look at the weekly. Maybe we should take a peek at the weekly and see what's going on with them.
oh yeah. Weeklies come all the way back into the order block body here. Also the top of that little fair value gap. See how it lines up nicely there? Inversion fair value gap. Got above it, come back down to it, find support at it, pulled away. So now we've got this fair value gap. We just had a wick. We wick through it. Wicks do the damage. The bodies are still staying inside this. So what's my analysis on the weekly? We're inside this thing right now, so I don't know. So we can either go from here to here. I don't know. Right now we're staying inside this fair value gap right here because we're off this mitigation block here. They did not break any lows. So this is all mitigation. Come back into mitigate to go long. Equal highs. There's lots of candy land up here still.
Which is exactly opposite of Swissy that we were just looking at.
So yeah, so this would push up for higher dollar or higher euro if that were
lower dollar. Which would
but
push
that's, don't forget,
Swissy
that's
down.
weeks. That's weeks. We were analyzing hourly. Don't forget, hourly's a lot different than weekly. Hourly can be super bullish if we're in.
No, we were looking at the
weekend.
weekly as well on
this
on Swissy.
on Swissy. Here's
See,
daily.
Swissy's also got upside.
Yeah. But we also have this return to an old low. Is that an old low back there?
Yeah, you should just pull out your weekly to take a look.
I just want to see this on the daily here. Yeah, there we go. That's the guy I'm looking for right there. So that's the tagging of the low. So we could see this. This low. Oh, I don't need that. I just need this guy. Right there. That's all we could see on the return that would support the euro. And I don't want to marry, and I don't want to customize, and I don't want to form fit a prediction. But that right there is still inside all these fair value gaps. Come up there, that would be hit it and quit it. That would be a return to the low and roll over and go. So
Yeah,
that's
possible.
That would be the upside of the dollar for the week. Next week, you see a push up into here. That would also give us our weekly down push on euro to get back into here. This little fair value gap cluster here. And then we could continue on the upside. Like you think about these order blocks are rode up and they come all the way back down into them, right? Then we ride all the way up and we could come quite easily back down into this order block. Last down close candle, right?
Yep.
So we could come all the way back into that fair value gap for a push down next week and still continue on the upside. That makes sense?
That makes a lot of sense. Actually, I think we could probably do that, and we could even change our sentiment and say, I think euro is probably going to go down for next week, and then we'll see a reversal in the next few weeks.
Yeah, I'd like to see this break this low here through the threshold of this candle. I'd like to see that get eaten up, get into this rejection block. Then I'd say, yeah, we're starting to get down here. But you have to lose the threshold of that guy first before you consider that going down any further. So again, you're back to the 50-50 kind of situation. Because right now, you may just get this to come down now into the 50% range of that order block or that wick. That would be the downside, which would be the upside to this guy. So we could be getting, I'm going to argue the other side now. You got the order block. Now for next week, if we push on up, we're inside this price imbalance, right? So we could come back up and work that price imbalance again. There's also the threshold of that candle, which is right there, which is slightly above our present high, which pretty much filled in that price imbalance again. So I'm back to I don't know, because I'm inside that I'm inside that the weekly fair value gap. I'm still inside that. So once you're inside that gap, I can't decide which way it's going to go. It's the bottoms are holding, the tops are holding. We're inside the middle of the threshold. So I don't know.
Yeah, it's a non-optimal trade.
It's not an optimal prediction of where there's not a solid prediction where that's going to go. The daily, we see this return into here. It ran up, and now it's back into the range again. So it popped into here, come back down. We still have this order block, this PD array here to hit, that one and that one. And then we have the third one, which is the, or fourth one, which is the threshold of that candle before running back up into that piece there. So it could come down because we've got this little consolidation type thing happening. Look at the 50% of the range that we have from here to here. There's 50% right on our midpoint of our wick, right? So if you look at that pull back into that wick again, that's where you can start to see it push up into, so drop down into here, run back up, right? That would give us our bullishness on our euro for the first little bit, first few days or a day or two, and then we push up into that for Tuesday, Wednesday high, Thursday reversal, continuation on the downside. If that was our high, I don't know. I'm trying to jump too far into the future with predictions. I should just stick with what I can actually, PD arrays I can actually see. And what I can see here is we're right on, we've already ran the highs out. We're sitting right on the top of that rejection block portion of it now. And we still got a few hours left of the day. Japanese yen. Look at that, Japanese yen. So this is the dollars pushing itself all the way back up into here. Big, huge wick, eating that all up. We're already through the midpoint of the wick into the threshold. It's already been eaten up already. So here's the threshold of that breaker right there. So we could come back up, revisit these old highs here. And then this all looks tasty up there.
That was the move today, it looks like.
It was a shitty move today. Look at that sucker. It went whipping all the way up, whipped all the way back down to clean everybody out that wanted to play. If you were catching it just to run to this, that would have been nice. If you were smart enough to say, I don't want to reach for too high PD arrays, and this is the point I try to make many times over, is go PD array to PD array. Don't run too many PD arrays outside of your sniping range. So if you want to snipe and get some money, that's a nice chunk of change right there. If you're going to snipe that, if you overextended and reached for the midpoint, you could have had that. But if you even went to the rejection block, you wouldn't have had of that candle, or the wick of that candle. You wouldn't have had that. You wouldn't have had that. If you were aiming too high, you would have missed it all, and then you would have got slammed and taken out. If your stop loss was sitting down, even if it was below that candle, you would have got slammed on it. So
let's take a look at the lower time frames on that move, because that was quite a move.
1 minute. Let's go over there.
Oh yeah, and it was quick.
1 minute. Whipped down, whipped up. Like, holy smokes. That's a news release, obviously.
Yeah.
1628. Yeah, 1630, so that's a news release. That's the 8:30 news release. And then run up. Fair value gap. Break below it. new fair value gap, come back into it, find support, low, low, lower low. Look at that. Nice. Inside that fair value gap, that piece from there to there, it just came back and tagged it multiple times, then did its work. I like that. Okay, so let's go to kind of running overtime here. So now this is S&P 500. I had this little guy on there last week. I had this guy on here, so we came back and tagged it yesterday. And now we're in 50% of that wick. So we're going to run the high in all probability. If you're looking at the push, it looks like further upside. So what are we looking at for the week? That's my upside reaches there and there. Oh, and that was this is the bot, the infamous bot, the Trinity Werewolf Alpha 9 bot. So those are your two objectives up there. I don't know why I've got all those marked off. I've got the top marked of that range there. And then, what was else did I have? Well, the body of that breaker right there. So body, then the tops. And I think this was the threshold of that breaker right there. And if we lose that, then that's the last little guy right there. But that definitely has got more upside. So it looks like it's going to run out the rest of this high here and start running into the breaker here, and we'll see what kind of reaction we get off that breaker on the S&P 500 on the weekly. And New Zealand dollar. This is, look at this, order block. We got above it. We validated it there. Fair value gap. We came back into it here. The body was obviously close to above it, but we came back into it here. Reached up. Now we got a new fair value gap here. We've come all the way back into it. Right there. Breakaway. We want to leave that alone now. Now this would be a nice island reversal pattern, a key reversal, where we've just returned into the threshold. You don't usually get the threshold violated. We want to see a piece of it stay open. So we just came back into nailing it here, and now we're looking for a further upside. I'd like to see this piece here become the next inversion fair value gap. That's the hourly, so I'll get to change my color. Let's give something not so abusive on the eyes. No, I don't want it to be powder blue. Let's go here. Khaki. Misha khaki. So there's some liquidity sitting above these equal highs here, fair value gap. I want to see that now hold support price, come up, find support on here, and then we're going to continue marching through the rest of this bigger range. So that's what I like to see there for that dude. For New Zealand dollar, looks kind of good. NASDAQ. Michael's been calling this all for a long time now. I don't know why there's so much yellow up here. Oh yeah, wicks, price imbalance. We're coming into that hourly price imbalance. Michael's been calling the daily and the weekly. There's that weekly fair value gap up there. In blue? I don't have it in blue. I have it in gray. Gray is my weekly. So we're looking for it to push up higher into there. We have a return to, nicely returned to fair value gap, formed here 2 weeks ago, or last week, finally finished. Then what do? We opened up, came down, hit it one more time, and now we've drove away from it. So that would have been a perfect entry for a long. last week or this week, Monday, Tuesday. When did that happen? Was that like? Do you see that entry? Wow.
That's lovely.
1, 2, 3, 4. Monday. That was literally Monday's pop right into fill of that fair value gap. Leave that one open, breakaway gap, come back in, fill it, and go. Wow. That you could have had like almost zero drawdown right there. If you would have taken that, you would have sat on that for 4 days, and then today you'd be enjoying a nice little dandy run all the way to the top of that fair value gap, and you could close out as soon as it breaks above that.
Could have closed out yesterday. Yesterday it also ran up there. It just wicked it. Take a look.
Hey, it ran up, wicked it, came back down, and finished off down here. And then you have another opportunity to recapture everything that it did yesterday. Wow.
Oof.
That was a really nice, look at that. That was all yesterday. This is all today.
Yeah, you would have
1,
had to
2,
take
3.
afternoon session
Yeah.
to get it.
Yeah, so how would this have worked? So we have a fair value gap sitting right in here. So we have order block, little tiny order block. We get above it. There's a little tiny gap in there. Not that you would have seen that right away, but if your stop loss goes down here and you got in on those, you'd be under some nasty drawdown, and then all of a sudden you'd be up. But yeah, that's not a good one. Not a great entry.
No, that's not an optimal trade right there.
No, not
Well,
this
maybe
one.
on a lower time frame.
This 9 o'clock London order block, nice body, breaks above the whole high, comes back in, finds support at it. So there's your 9 o'clock order block in London. And you're also right on the 50% of that range. Break above it, come back to it. Interesting. Yeah, I don't know.
Yep.
I don't know if I would have seen it. I used it as if I was wanting to get the rest of my fair value gap filled, then that would have been a nice little entry. I would have probably been pretty nervous saying, "Oh, it's almost filled. My objective was almost hit." I don't know if I would have been so bold as to get in on it there, or even to have seen that. To be honest with you, if I was in the hourly, I probably, even though you saw that nice candle, I probably wouldn't have got in on that.
No, especially because it's overnight for us.
Yeah, that was 9 o'clock. That was like 1 or 2 o'clock in the morning for us.
Yeah.
So other than that, that's pretty much it, man.
Yeah.
That's my
That's all
assessment
I
for the
think.
week. We will call a conclusion to Breakfast Club for Friday afternoon. We've done I think it's been a pretty good day.
Yep. It's been fantastic.
So I had a lot of fun. Thanks a lot for popping in, and we'll see you again on Monday.
All right. See you, man.
Thanks,
Have a